Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon, and I would like to go over portfolio management and looking at the position delta and figure out why it's important. So let's take a look. Traditionally, you can manage your portfolio by only have long stocks or short stocks. But if the market sells off, how can you be comfortable with your exposure to overall market? We've talked about Sharpe ratio, we talked about beta, we've talked about different ways you can use portfolio diversification techniques. But at any given time, you want to know how much exposure you have to the market, especially if you trade in options. So let's talk about how can you find out how much exposure you have to the market by using delta. So we talked about long-short equity fund. At TradeSpoon, we provide you with recommendations. Every day we send you a trade recommendation that shows you either long ideas or short ideas. We also manage in a real-time portfolio where you can see all of our positions, whether we are long or short, using the options. But then if you are using options, how can you find out how much exposure total sum of all your options have to the overall market? And how can you be comfortable with that number? So option delta, let's go over that definition. For individual position, for individual options, delta is a measure of the change in options theoretical value, given a dollar change in underlying stock. So if you have an option position and stock moves by $1, delta tells you by how much will the price of the options. The higher the delta, the higher the change will be in the underlying option price. When stock is up, position generally gains value. When stock is down, position generally loses value. So positive delta meaning you're bullish on this position. If you're short, if you have a put or you have a short call, then you are bearish on the underlying stock. So position delta represents two very important things: directional bias and portfolio risk. So once you determine position delta, you can sum up all of your deltas across all your individual positions, and the total number gives you a good approximation that if the market goes up, how much money you will make if you're bullish and you have a positive position delta, or if the market sells off and position delta shows you, let's say you will lose 10% of your money if the market sells off 10%. That can give you a comfort level of your overall exposure to the market. So position delta is a very important number because it gives you a feeling of how much exposure you have if the market sells off. And if you have too much exposure, let's say you have 10% or 20% exposure to the market sell-off, you can build diversification techniques that can help you minimize that exposure. And that's very important. So you can find out more information if you go to tradespoon.com webinars. And you can also follow us on social media. Thank you.